What's going on, guys? This is the DeFi Crypto Alliance show where we're doing our best to help our real estate investor friends, our entrepreneurial friends understand the opportunity that is crypto that we feel like is the biggest opportunity over the next few years. And so we're blessed to have you guys along for the ride. We've got an excellent guest on the show today that we're pumped to have. So Corey, take it away and intro our guest.
Absolutely. So Corey Geary here, and I'm just having an amazing time out here in beautiful Puerto Rico, being on this wonderful journey with you guys where we're going to use cryptocurrency as that wealth creation tool and real estate as that wealth preservation tool. And man, I feel so confident I'm in the right place at the right time in the right ecosystem with protocols launching on the Pulse Chain ecosystem that are just phenomenal and absolutely blowing me away with free airdrops and passive income. And I mean, this thing is printing me money. It's amazing. So I'm super excited about it. It's really made me level my game up as far as learning about liquidity providing, understanding, how the balancer DEX works versus a Uniswap or a PulseX decentralized exchange. So I've gone deep down the rabbit hole because this protocol called Phux. And we have an amazing guest who represents Phux, and his name is Dylan. And actually, Buck is supposed to be on here this morning. He is still sleeping. Supposedly, he's in the mountains skiing. So hopefully, I just really messaged him again on Telegram. So hopefully, he sees our message and he can come on here because I love talking to Buck too because I always learn something about markets when I'm talking to Buck. But man, Dylan, thank you so much. You're usually the beautiful face on screen. Today, is your camera not working? What's going on, brother?
Yeah, I'm having a little bit of camera issues today. Sorry, guys. Appreciate it. You can't see my beautiful haircut right now. Sorry.
It's always so perfect, dude. I see you.
I try. I try a little bit,
And so I realized the other day, how did you end up with the PH team? I don't know the background on this story.
Sure, yeah. It kind of started from back when I became an admin for the Richard Hart ecosystem. And I was moderating for Hex Trading. Okay. And this was back in, I would say, late 2020. I really enjoyed the telegrams. I really wanted to get involved in the community and everything. Right. So I asked to be an administrator and help with the spam and shit and stuff like that in the telegrams, right? And the other reason that I wanted to be an administrator to kind of help was there was a couple of admins that were banning people for thinking about other things, other than up only bull mode, bull tard shit, right?
Right.
So I found that really, really annoying. So I became an admin so I could unban those guys that were getting banned for just being reasonable, right? And one of those guys was Buck, okay? And so I would unban him every once in a while, and I got to know him because of that. And he invited me to some back chats. Some of them were a little dark, but they were really good fun, and I learned a lot of shit in those. And then we spawned off some other private chats and channels, and early 2021, I got to speak with Buck and I think like 25 other OGs pretty much on a daily basis. That's where the relationship kind of spawned, I guess, right? And then one day we're in these same chats, and then Buck's like, "Hey guys, I want to fork Aave," and then we're all like, "What the hell are you doing?" We gave him the typical like, "You're running a sacrifice. Oh, screw you," like the typical spiel, right? And then he's like, simmer down, retards, and listen to what I have to say. And he told us exactly what it was, why we needed it, and everything like that. I was like, oh wow, yeah, actually this makes sense. I really like to help you here. I'll do my best. Everyone knows who I am, so hey, what can I do? And that's how it happened, man. That's
Cool.
what happened.
Very cool. So tell us, I'm curious. So why do you think that Corey and I have our own opinions, but in your words, why do you think that Pulse Chain needs Why does it need an Aave fork? Why does it need a GMX fork? Why does it need a balancer fork?
Sure. So in terms of the Aave fork, we're gonna need somewhere for whales to diversify, to take out loans against their assets, and fiat kind of takes care of that. It's the bank for Pulse Chain, where you can deposit a range of assets and you can borrow against them. And then you pay a fee, right, on your loans, and then you pay them back at your leisure, right? That's pretty powerful. That allows you to, not just have to only sell the assets. You can just borrow against them, right? Last cycle, all we had was if you needed cash, you had to sell. You had to sell your hex if you needed cash. That's all we had. But now this cycle, if you're getting up to where things are looking really, really frothy, and hey, I need a new Lamborghini, or hey, I need to finance this business venture that I want to do because I think this is going to take off or whatnot, right? You deposit your hex, you take out a little loan, and you pay it back as you see fit, right? And that's pretty powerful. That is very powerful. Then you also have the ways where big players can borrow for liquidity purposes. They can borrow evening out the market for stable coins. Like for instance, I am really going to look forward to leveling out the playing field on the stable coins. Now that we have a stable swap feature on PHUX. When fiat goes live, I'll be able to deposit, my stables and then borrow one particular stable, and then sell it for these other ones, and then get a little bit more stable coins because I'm, shorting one particular stable coin, right? It's kind of complex, but basically I can short one stable for another. And those are like really low risk plays, but you can make a little bit of money doing that stuff. So that is something that you'll be able to do with fiat, and that's pretty powerful. And then obviously with Fame, you'll have the leverage trading decks, the ability to really ramp up your margin. I think we'll probably have like 30x margin in the onset. That could change. It could be higher. It could be lower. I really don't know. But on testnet, I think it's at 30x right now, right? And that can allow you to, you can be a staker for that platform, just like you can for fiat, and you can get a share of the revenue generated from the trades that are being executed. You can be a liquidity provider.
I'm excited about that.
Yeah. Personally, I think that one is the golden goose.
The house always wins.
I mean, listen, there gotta be. The GMX fork, we're forking GMX, right? And GMX accrued, I think, $150 million of fees last year on a layer 2, right? So it wasn't even on a layer 1. It wasn't on Ethereum. It was on Arbitrum. So having Fame on a layer 1, the native chain, that could probably be pretty advantageous for us, perhaps, right? We don't know. Kind of just speculating here, but I think that's very powerful. But as I was saying, you can be a liquidity provider, and you can allow traders to use your liquidity to open up these positions, and try and speculate on the market price, right? And then if they get liquidated, you get all of the proceeds of their principal position, right?
Yeah. You want to play the game? That's just how it goes. You want to play I used to work in the casino business for 16 years.
Really?
Yeah, I was a blackjack dealer for a long time. And so I know what it means to be the house, to play against the players. Now, it wasn't my money, unfortunately, but this year I get to come in and play as I'm the house with my money.
There you go. Yeah. And that can be really powerful, right? Because typically the traders, they usually don't have winning streaks. They typically, I think, what is it? The number on eToro or something at the very top, like 75% of traders lose or something like that, right?
Right.
And that's just what they want you to know, right? They they don't say like 90% of them actually lose, but
90%, and I'll take those odds all day long.
Right.
yeah, exactly. And so you can be a liquidity provider and you can get some pretty attractive fees that way, right? Or you can try your luck and try out your charts and trade to your heart's content, trading
with that one.
and all that stuff, right? Now, there's more ways to use that stuff than to just speculate, right? You can hedge your positions, okay? Which is really powerful. You can open up little insurance policies with high leverage and kind of protect yourself against downside, right?
Yeah.
Like in the beginning of Pulse Chain launch, I kind of had an idea that we were going to go down, so I sold my Pulse, right? And to protect against the upside, I could have opened up a long, with a small portion of my bag, just in case, I didn't actually sell the top, right? Because hey, I don't really know exactly what the market's going to do, right? So I could have done that. Now that we're maybe somewhere near a bottom, I can also open up a long because I'm still sitting in cash, right? And I can protect against that upside risk. Okay. And then if it goes down, I don't care. I can still buy at near the lows and still get a very nice position in my coins. So yes, very powerful tools that we're having here, guys.
Yeah, I love the last concept there that you just talked about. I think I could see myself using that a little bit in the bull run, just for the insurance. Like you said, when Hex was top heavy and people are dancing on Eric Wall's coffin, you might want to think about taking a short or selling and hedging into the long, whatever you might want to do there. But that is the time when those kind of tools really could come into play as a smart investor.
Exactly. Yeah, and we didn't have this stuff last cycle, guys, right? So not only will you be able to now long and short Hex finally, but yeah, these advanced kind of concepts, you'll be able to have them at your disposal now. And then
go ahead, finish up.
And then now we have Balancer Fork, right? We have PHUX, a decentralized exchange that has a stable swap pool. I cannot tell you how beautiful it is to have a stable swap pool on Pulse Chain at the moment. Going in and out of, like, I don't know if you guys noticed in the beginning of Pulse Chain launch, but USDT was worth $2 in the beginning, right? So if you were able to win the bridge lottery, you got a fucking killer deal, dude. You got like the cheapest buy-in on Pulse Chain if you were in USDT. Some people really got a fucking steal doing that, right? Because they just won the lottery. Okay. And there was a depegging I think 2 weeks ago, I believe, and shoot, I made $1,000 on a stablecoin trade just with when before PHUX even existed, just trading on PulseX, even with the crazy slippage, right? So things like that, you'll be able to actually level out the market a lot more efficiently now with the stable swap pool. You can go for $500,000 trade and then basically not pay any sort of slippage, just because of how it's structured, right? There's a huge plateau and then a steep drop off on either side. Basically, is what it looks like when you kind of measure it out and everything. Yeah, that's extremely powerful. Also, these maxi perps, now they have an abundance of liquidity, which I would argue that on ETH, I don't think they've ever had that before. All combined, I don't think they've ever had nearing, I think, almost $1 million now.
Can you pull that up and show us? Would you mind?
Sure, yeah. Let's share the screen here, boys. Actually, let me change my wallet before I show it to you guys.
Yeah, don't show us all the goods, man.
Yeah, pay my trader wallet, not this one.
And while you're doing that, do you want to give us just a tad bit commentary on eFiat? Do you think is the handrails taken off on that protocol yet? Is it, what's going on with that one? It just seems like we don't talk about it much anymore.
So I'm pretty sure that there's devs aren't kind of removing those permissions at the moment. They can't really, because if you guys haven't noticed, the liquidity yeah, the liquidity over there on the east side for pretty much all of those assets is very depressed at the moment.
It's nothing.
Yeah, it's bad. So naturally, having these high restrictions, keeping things safe, is a pretty good practice at the moment right now, right? So
Yeah, and we're just not making much in the yield from staking,
unfortunately, and that just has to do with the just the restrictions that are in place.
Right.
Like there was a buddy of mine that was using it to short, or he was actually trying to go long on Hex, and pretty sure that the devs, when the price drops, they add more Hex to kind of stuff it out, so other users, they kind of crowd it out, so other users can't, just to kind of protect the protocol at the moment. And he couldn't like lever up, but it's. Go ahead.
No, you're good. You're good. Go ahead.
Yeah, basically it's just protecting, and it's in the best interest of the protocol for it to, be very, what's the word that I'm looking for here? Very like defensive, right? Essentially, eHex at the moment is very easy to pump and dump, because there's a wide range of liquidity band that is, I think, maybe at like 1 cent. And then it's really thick liquidity up there, right? But where we're at now, it's kind of in no man's land, and it kind of has very rough swings in either direction if anybody inserts any sort of liquidity into the market. So it's very illiquid at the moment. So when the liquidity starts to come back over on ETH chain, hey, I wouldn't see why the devs don't open up the floodgates, so to speak.
Okay.
Cool. Yeah, walk us through these pools, man.
Yeah, so I was talking at length about the bridge stable pool, right?
Yeah, I love that pool.
Yes, I love that pool too. I myself have some liquidity in that pool. Very proud of that. Yes, making some good money. And I was talking about the Maximus perps, right? So they have literally almost $1 million of liquidity now, between the Maxi, Deci, Lucky, Base, and Trio, and then 30% Hex, which is I really don't think that they've ever had that much liquidity, across these different pools on the east side, right? So now they have it all in one place, and if you have any of this stuff lying around, you can literally put it to work, and you can get a little bit of PHUX, APY in the farm, right? If you stake the liquidity, and that's essentially, come to think of it, just thought of this right now. That's like your own staking ladder. That's also giving you more yield on top of the hex that you're making in the ladder, right? Like, come on, how can you get mad at that, right? Like, come on,
Right, that's exactly what it is.
Yeah, yield on yield, yeah.
Yield on yield, put that sucker to work, man. So
how does so specifically this pool? This is a good example. I'm trying to wrap my head around how the liquidity works. So you group all these Maximus perps. How does if somebody wanted to come and take a position in, say, Lucky or Deci or Base here, do you know how the protocol works in regards to routing it in such a way where, I mean, because that's how I understand it, you can get a larger position in one of these since they're grouped together and the liquidity works together. Is that accurate, or am I misunderstanding that?
So if you take the $900,000 worth of value, right, and you divide it by like 6%, then you get 6% of that 9 is Trio, okay, or 6% of that is Base, or 8% of that is Lucky, 25% of that is Deci, 25% Maxi, and then obviously 30 is PHEX, right? So yeah, if you're trying to get into these positions, depending on what you're using, it still works as like a V2, in the sense that, like, say you're selling Deci for Maxi, it's going to affect the ratio of Maxi and Deci between the whole pool, right? So because now there's going to be more Deci in the pool than there is Maxi, because you let's say you took your Deci and you sold it for Maxi, right? So it's going to adjust the ratio of maxi for the rest of it, and it's going to adjust the ratio for deci across the rest of that pool. Now that doesn't include going to the swap, and then also calculating. Let's do this trade here. Let's just see. Let's do deci. Let's see, we'll do maxi. Okay. All right. Let's see if I can preview this. I cannot. Fuck. But usually you can press preview down here. I don't have any of this in my wallet, so
Okay.
it'll show you what it routes through, right? So it'll route through many different liquidity pools to get you the best order execution that you need to get, right? But yes, it essentially, it just allows the trading between the two in that pool, and it kind of evens out the market in that sort of way. It's
Sure. That makes sense.
Yeah.
Cool. I like it. How does the and I think Corey stuck the landing on this, but as far as so you can come in here, you can stake in these pools, you can create a basket of tokens and be part of the ones that have multiple tokens. The APRs there on the right hand side, there's a range of APRs, and in fact Corey indicated that. So what you need to do in order to maximize to get the top end of one of those pools APR in the Phux token, you need to go and have the same amount of the pool in the prime Phux pool and have those staked as the same position, the same amount of the pool in one of those others to get the 2.5% bonus.
X.
Or X, yeah. Is that accurate? Am I saying that correctly?
That sounds accurate. Yeah, there's a pretty big math equation in the Balancer GitHub that goes over this specifically. But yes, essentially, it boils down to your max link stake for the prime PHUX, right? Because so kind of baseline here, if you have PHUX, and you want to participate in the farms and get a boost on your APRs, and you want to vote on what farms get what distribution of PHUX rewards, then you need to deposit your PHUX into the Prime Phux liquidity pool, and then you got to stake it. Okay, so that's kind of the baseline here. And then if you want to increase your bonuses for whatever pool that you're in these farms, because if you look right here, you'll see minimum staking, minimum PHUX APR, and then you see maximum PHUX APR. And that range. Oh, look who decided to wake up. Good morning.
We got him.
Sleepyhead.
Hey guys, how are you?
Doing great, man. Glad you're able to join us.
Yep. Yeah. Sorry about that. I had a pretty long drive yesterday, and I didn't know that we had had this meeting, but I'm here. I see you guys talk about PHUX.
Dylan reached out to me like a week ago. I was like, "Yeah, and that's why we did it late. Did a late show." Dylan, what are you doing, bro?
I have it in this calendar, but yes, it is. I did remind him yesterday, so yes.
Dylan's been doing all the PH protocols justice. This has been great.
Excellent. That's what he's there for. Yep. Carry on. I'm listening.
Roger that. So as I was saying with the PHUX APR rewards, right? After you've staked your prime Phux to get VE PHUX, based on the amount of liquidity that you have in the pool, how long you're staking your prime PHUX, and then how much prime PHUX that you have determines your boost, right? Now the specifics of that is a little bit of calculus math stuff that I don't know, but if
there's a lot of math. I went and looked at it and I was like, oh yep,
it's pretty complicated, right? So I kind of eyeballed it, right? And then I'm sitting at I think around 2x for mine. I'm not maxed out on the stablecoin pool, Yeah, I think Corey, he's probably kind of figured out a little bit.
Yeah, and I don't remember if I thought it might have been you, but it might have been Three Arrows. Because remember one night you pointed me towards Three Arrows, and I had a bit of a small conversation with them. And so a couple things, and let's let Buck in and see if this is right. So the first thing, you could only earn the 2.5x multiple up to the position size of your VFux pool. So if you own 0.1% of the VFux pool, then in your RH Maxi pool, if you up to that 0.1, you can earn the 2.5x. Anything over that, you're starting to dilute that multiple. Is that accurate, Buck?
Yeah, sounds accurate to me, but I'm actually not like the world expert on this one yet.
Okay.
It wouldn't surprise me if you know it better than I do at this stage.
I got that information from, I think, for Three Arrows is who I got it from.
Oh yeah,
Right.
he's the expert.
Yeah.
That's a good source.
Okay, and then also one thing, guys, with the VFux, the way it pays out rewards, I just received mine today, and I'm a first day staker, so that was like 10 days. I'm not sure. I know, Dylan, you always say it's one epoch. Do you mean like an epoch in like on the blockchain, which is like only a few minutes in the blockchain?
So I'm talking about this epoch, right? So 7 days.
Right there. Okay, gotcha.
So you can vote once per 7-day period. Is that right?
You can vote every 10 days. But these farms that you're able to vote on, they shuffle around every 7 days. Okay. Now, when we had the first 7 weeks, or I'm sorry, 7 weeks, 7 days, the only one that was kind of participating at the time for that previous week was Buck, right? So the second week that went live on Thursday, Buck saw his rewards, right? And we all were like, okay, well, hang on a minute, we don't see our stuff, right?
Right.
And then now this week that we're on, now we can see, if you were staking in that first epoch, now we can see them being in the second one. For us, now we can see our rewards because it is backwards looking, right? So if you participate in this week, you're gonna have to wait for a full epoch to tick over before you can actually see your rewards for the VE PHUX stuff. So the Prime.
So the reason for that is basically we have to go and collect everything, and then it gets distributed. So that happens kind of after the period's over. And there's like a 2-week lag on it, basically. In the beginning, we needed to let that kind of basically roll over. But now the experience is basically every week that you'll receive these things once they start kicking in.
And when you guys say rewards, you mean when you go into the claims section at the bottom of the page, you have your protocol revenue and VFux incentives. It's there.
There it is. Yep.
That's what it'll look like.
Cool. Very good. Cool. Well,
Yes.
are there any things here on Phux? Well, in fact, here's a question. I'll let you guys take this one. So Frank asks, he says, if you're looking to go full-time crypto, Dylan, this is for you. Where would you spend your time in the Phux ecosystem to begin creating cash flow now? Where should one's focus be optimized?
I mean, that sounds like financial advice to me, sir. I don't know about you. I mean, what I'm doing is, since I'm sitting in stable coins, I've just put things to work, right? So I've just provided liquidity in stable coins. There's risk with that, right? There's bridge risk. Okay. As you can see, the pool literally is called bridge stable pool because it is bridged in stuff, which if the bridge goes belly up, those become worth 0 almost immediately, right? So, there's that type of risk. You can, if you have a portfolio in RH Maxi stuff that you're just sitting on, you can just throw it in liquidity there, right? But you're going to incur possible and permanent loss on 1 or 2 assets, perhaps if like one of them goes belly up or something. Now, since the weighting of them are spread out, you don't get extreme and permanent loss like a 50-50 pool, right? But obviously it still exists. It's not like it's not not possible. Okay. But it's kind of those, if you're asking how to go full-time crypto, maybe you're just not ready to go full-time crypto yet. You know what I mean? So maybe it's one of those situations. But yeah, if you have money, you can go put it to work. But I would be well ready for any sort of risks that are involved with this stuff, right? So, I kind of always joke around where, at a moment's notice, I'm ready for homelessness, right? Because all of this shit can go to zero, man. So, yeah. So I don't really give financial advice, man. So don't know what to tell you.
That's fair feedback. Cool. Are there? I mean, I think we've covered Phux pretty well. Are there any other things that that you guys are really excited about here that you think people should know about PHUX?
I talked about the stablecoin pool, but I didn't really show you how like advantageous it really is. I think you guys should all visually see this, right? So if we go, let's do DAI in USDC, and we just do like $1 million, right? So because that's a pretty big number that everybody has, right? So you take $1 million worth of DAI right now, and you swap it for USDC. You're getting it looks like
$86 in slippage.
$86 of slippage. That's nothing.
Amazing.
And then we go to V1 of PulseX. Okay. And we go to trade. And then we'll do what? We'll do DAI. Yep. And then we'll do USDC from Ethereum. Let's do $1 million. Let's see what that looks like. Jesus, it's still astronomically high. So $151,000 of slippage. If that's yeah,
It's a big
so
difference.
that is yes.
Yep.
What about V2, Dylan? Maybe it's better over there.
Yeah, let's try V2, guys. Let's try V2. Let's see what this looks like, huh? So if you guys didn't know, V2 and V1 of PulseX exist because V1 currently does not pay any sort of liquidity fees.
Oh, we know.
to the liquidity providers. So we're really gonna do $1 million on V2?
Well, you can just put the numbers in and see what it says.
We'll just do $100,000, and I mean that's pretty. $100,000 is 52.
Half off, yeah.
Yeah. So $1 million, you get absolutely shafted.
Right.
Wow, there's nothing.
So don't do that, basically.
Yeah, please don't do that.
Yeah, I don't think I understand. Dylan, would you connect your wallet and do the swap for us to show us in real time? Yeah, no, this is very cool. And like you guys were talking on another stream about efficiency, money efficiency, and that especially the larger players, when you have big bags, you need efficient ways to be able to move through the markets. And I think it's really cool that you can go to PHUX and move money more efficiently. The thing that I really like about all the PH protocols is they're protocols that a lot of larger money players, they're looking for tools like this. And I feel like a lot of bigger players will be incentivized to come and play the game. Without tools like this, they just wouldn't. They might not come over at all. What are your guys' thoughts in that respect?
Yeah, so I think that we've basically captured a lot of the bigger guys that are in the community because we just knew them in Telegram at the time of the fiat sacrifice, right? And we kind of kept it short, sweet, and simple for those guys. And so they backed us. They kind of dipped their toes in the water, and see what could have been done, right? And then with Famous, we got a much bigger, outreach and got all those guys too, right? And as you can see, just within a couple of days, we were able to pass the TVL of Pulse XV2, right? And it's not like all shit coins, right? A lot of it is in the stablecoin pool, right? So we're pretty sure that the guys that are listening to us and are enjoying our products are the bigger guys in the ecosystem, right? So naturally they're gonna love using this stuff, as you can see, obviously, right? And they'll learn how to use fiat properly, and they'll probably enjoy using it, whether it's, like I said earlier, to provide liquidity, or to do any sort of arbitrage plays, or whether it's to speculate in some sort of way, shape or fashion, or just take out loans, right? Because those guys, they like buying stuff when the time is right. And I'm sure that they're going to like taking out loans to go buy stuff when the time is right, right? So, but
the other thing is the exogenous sort of impact that we can get from people outside of the community. They're going to want to look for ways to get in, and
true.
definitely these things we're building are going to help with that. You don't want to. Most people, God Whale's an exception, but most people don't want to buy and create a ton of slippage when they buy. They want to be able to come in and not really move the price up too much, and they want to be able to also do the same when they go out. Having liquidity, having the ability to do flash loans or arbitrage with a stable pool, for example. These are all tools in the toolkit of some of the bigger users, power users, if you will, that we would like to attract to this network. That's what we're building. We think are just sort of the primitive roadblocks that kind of make us, like on par with the rest of the L1s out there in the EVM universe. We think it's a really useful thing. Not necessarily, not stuff that all of us necessarily care about, but the guys that you want in definitely do.
Yeah. Yeah, I'm super excited about, we were talking about this before you hopped on, Buck, about providing the opposite end LP on Fame as being the house, basically, because I used to work in the casino industry for years in my previous, before I was doing real estate. And man, it's going to be amazing to actually be the house, because 95% of traders all get wrecked. And so it's, I'll gladly put up the liquidity for that, and they want to come in and gamble with my money, so be it.
Yeah, exactly. But that's what's nice about that protocol too, is that it's fair in the sense that you get to choose which one you want to be, right? So the traders can be right too. It's just most of them aren't right.
Right, exactly.
So it doesn't mean there isn't a smart trader out there that can't beat you. In the casinos, you'd be aware of these scenarios where you get guys that are really really good at counting cards or things like that, and getting edges. They've just got more discipline than the dealers do when they play blackjack or whatnot. That kind of stuff. That's possible as well. So you have to keep an eye out for that. But yeah, the really nice thing about what we're doing also is just the interoperability potential. We don't really talk too much about that yet, but there's things we can do with the three of these platforms together that no one else in the crypto world can do, because we run them, right?
Can you give an example?
Just like the LP tokens for fiat, for example, or sorry, for Fame, could be potentially deposited on fiat, right? Just as a very simple one,
Yep.
right? And then you could borrow against those. The LP tokens for Phux could potentially be used on Fame or on fiat, right? Which isn't to say that's going to happen overnight, but There's just a lot of different things. And then Balancer has many different types of pools, which we haven't enabled yet. Because basically we were in a rush to get it out when there was the hiccup with PulseX. So we wanted to claim that first mover advantage, which appears to be working quite well for us, or second mover advantage, I should say, rather than wait. But yeah, we'll roll those out, and there's things like boosts for Aave in Balancer, so we could do something similar potentially. So I mean, there's just a lot of different things we can do when we start to think about how these protocols can interact with each other. And on top of that, it's like we don't even have to come up with all the great ideas, because a lot of times these guys are doing it themselves already. They're working with each other to kind of make their protocols better. There's just a lot we can do once we get rolling.
That's cool. Corey and I were we went and did some research on the Balancer protocol. I mean, most LP pools, right? The high APRs are not sustainable. The APRs come down over time. That's something. Would you say that's probably a fair assumption that probably happens here over time, right?
That's true everywhere. So,
right.
It's something to just know. Like when you see large APRs advertised, they're always unsustainable. Because basically one of two things has to happen. Either the price needs to adjust so the APR becomes less, right? Or basically the rate needs to come down, right? You just can't grow exponentially forever, right?
Sure.
That's just true of anything. So yeah, anytime you see that, you need to kind of assume that's not going to stay that way, which is why there's often a feeding frenzy early on these things. That kind of gets people interested. But the other thing is, a lot of times these APRs you see, they're with like a fake token that doesn't do anything, right? Like they just pay you a reward token, or like a token that provides what's the word I'm thinking of, Dylan? Incentive
token? Yeah.
So no, not the incentive.
I'm sorry, just incentive.
No, yeah, not the incentive token. That's a very important token. I'm talking about a token that provides incentive. Sometimes there's a token that provides incentives, and that thing doesn't do anything, right? And maybe it's got like a dog picture or a cat picture, which is pretty good. Attached to it, but it doesn't really do anything. So what happens here basically is we're basically redistributing, if you think about the equity value of the platform as a over the next kind of 6 years through the PHUX emissions, right? So that's one thing. And then the second thing is that half of the platform fees, which was about $10,000 in the first epoch, get redistributed to the people with VE PHUX, right? So over time, if we can get that volume to increase and sort of become sustainably large, then this thing's actually just churning out money every week, right? But those APR numbers aren't really good indicators of what that's likely to be in the future, right? Those are kind of contemporaneous snapshots that don't really tell you much about the future, to be honest. Sure. There's a lot of risk there in the sense that we don't know like what those fees will be. We don't know if something better will come along, and no one will use this thing, right? But also we expect that volume should increase over time. Right, we don't have the deck screener things, connected to us yet. We don't have aggregators connected to us yet. All that stuff is gonna kick in over time, and start sending us volume. So, there's not a lot of arbitrage bots yet. I mean, it's just, and then also Pulse Chain's kind of dead at the moment as well. So, so you have to not look at necessarily the fees today, but what the fees might be in the future, and then sort of discount that, right?
Right.
Because a lot of people I think they just go, well, how much did I get this week, right? And it's like, well, what you got this week doesn't matter so much, right? It can give you a little bit of information, but it doesn't really tell you too much.
Yeah.
Balancer, is doing hundreds of millions of dollars of fees, right? It's the third, biggest DEX on Ethereum. That gives you some useful information, right? That's kind of, if we can be, similar, in terms of our position on Pulse Chain, then this protocol can be quite valuable.
Right.
Assuming PulseX is doing a 10,000x, then we're which I think is sort of everybody's base case.
Bro, you're gonna get Westcott mad, man.
I'm like,
We already did that.
Yeah, he's already mad, man.
Who's next?
But yeah, like assuming that's everybody's base case, then the second best, the second biggest DEX on PulseX can probably do a 20,000x. You know what I mean?
No, I think if
just because it started from a kind of a lower starting point, right? But like over time, they kind of move together, right?
Yeah. Why not a million X, Buck?
If
10x more than PulseX, come on.
If your base case is a million X, then yeah, that's probably the same relationship is true. My base case might differ from others, I guess, is what I'm going to tell people from now on, rather than
fair enough, I guess,
rather than give them a number.
Fair enough. Here's a good question you guys could answer regarding the weekly protocol revenue sharing and VFux incentives. How does it work? The protocol collects the fees, buys Phux, creates a bit more Prime Phux, and then distributes the tokens. Yeah, that's a good question. How are those things calculated? How are they distributed? Do you guys know?
So I asked 3 Airs about this morning, actually, and I'm waiting for him to get back to me.
Cool.
Personally.
All I know is it appears in my claim section, and I push a button. But yeah, they run something that does this function.
Sure.
But I don't know the nuts and bolts of it myself.
Yep. Sure. I'm still trying to learn it as well. So, yep. You guys will learn with me, I guess. So to speak. So.
Cool. That sounds good. One of the things I was curious about. So on a stream you were on the other day, Buck, you were talking about the market cycles, or the market cycles that a lot of people believe in and seem to like in crypto, and you seem to indicate, if I understood you correctly, you're not a big believer in those cycles. I'd love to we don't have to do price speculation here, but I'd love to hear about market cycles and some of that stuff, timing, things that you're looking at to gauge sentiment if it's not market cycles.
Yeah, so I think you're talking about the Bitcoin halving.
Right.
I'm not really a believer in that stuff because it's well forecasted and well understood, and usually when that's the case, it's very hard to game these things. And there's a thing called the efficient market hypothesis, which you guys can Google, that basically talks about the concept of semi-strong form market efficiency, which basically says, if you're reading about something in a newspaper, the market's already adjusted to it. You can't go buy on that news, right? So a lot of these things I think are just narratives that unsophisticated people in the crypto, universe basically, promote to kind of get people excited. But I don't actually think that's what's driving crypto prices up anymore. And what I think drives crypto prices up is probably a few things, but namely the global macro picture. and two, sort of the overall amount of people using it, and not just numbers, but like their economic mass, right? So when you onboard BlackRock and Vanguard, that they're more important than Dylan, right? In terms of what they bring to the table.
Dylan's more important than me and Dane.
Yeah.
That really sucks.
If BlackRock wants to have a Zoom call with me about pH products, I'll be on time to that one. So like I think those are really the things that matter. So just in the context of Bitcoin, a lot of people thought that those halvings, were sort of correlation is causation. But I think Bitcoin had the perfect macro setup because it started literally at the bottom of the market in January 2009, and then had a decade of quantitative easing. So it only knew low interest rates and up only markets for the first 10 years of its existence. So that was basically the thing that was pushing it pretty steadily, and it was getting more and more user adoption the whole time, right?
Yeah.
The first real test that crypto had in terms of macro, it didn't come really until last year when Jay Powell started hiking rates over a dozen times, right? That's really, and then Bitcoin suddenly wasn't so invincible anymore, and guys like Michael Saylor, who were really fucking certain because they're all he went to MIT and you guys all love him, finds out that actually interest rates do matter a lot, right? And I can't tell you how, like in 2021, I told so many people about interest rates, and they'd say to me, "Oh, Buck, shut up with all that stuff. That stuff doesn't matter. This is crypto. Crypto's different." I'm like, "No, man, it's not different. It's all the same. All assets, they're all connected. Like this is why it's so hard to find diversification, right? Risk assets, they all go up and down together, and crypto is just another risk asset." And I had this conversation like with so many communities, not just the Hex community, but they all say the same thing to me. Oh no, our stuff's different. Like we've got this thing called the T-share, Buck. You probably don't know what a T-share is. I'm like, well, actually, I've been here since the beginning, and you got here a week ago. So yes, I know what a T-share is, and no, I don't care. Like that's not why Hex goes up.
Agreed.
But so people basically talk about stuff like that, like they know that like the halving is going to somehow create a thing next year. I don't think so. I think people will talk about it, and I think that likely next year will be a good year, but it won't be because of the halving. It will be because probably they start cutting, and the SEC brings on allows hopefully some sort of spot ETFs, and more institutional investors start to enter the market. But that will just be spurious correlation, right? It won't actually be causation. That the whole halving thing's happening. So yeah, I think anytime people are talking to me about a narrative where all this big event's coming and we can all see it, I'm actually very likely to sell ahead of that event, because, well, maybe not sell, but I'm maybe like I'm oftentimes pretty happy to do the opposite of whatever that event is implying, because I think a lot of people panic when that happens, and then the market just ignores them, or basically fucks them. So like a good one was what was the ETH thing that happened last year? It was supposed to, yeah, right. Everybody was like, "Oh, it's gonna kill, like ETH's gonna die." I was buying ETH through that really hard, and nothing happened, right?
Right.
And it's like, well, what do you mean? And Richard's always going, "Oh, what about the Mt. Gox coins, man? Like that's gonna just no, it's not, Richard. Like they'll they'll distribute those in a way where it's pretty well choreographed, and the people that get those coins, they've had the chance to get liquidity. They've had the chance to basically offload their position to third parties. And so the guys that are going to get those coins are rational people. They're not just going to go show up and hit market sell, right? And even if they did, there's going to be a whole bunch of other guys that are going to go, oh, I'm going to jump in there and buy that temporary fat fingering, right? So it won't happen, right? So I think this is a very important lesson, though, because I think a lot of people just don't get it. They think they can just like hear whatever rumor is happening on Twitter this week and go trade off of that and make money, and oftentimes it's the opposite, and usually it is, and that's why platforms like Fame are going to be so profitable. Is because people think like this.
Yep.
Interesting. That's really interesting. So what would you say? I mean, a lot of the time you go back, you look at historical charts. Once the government, once they start cutting rates again, that's usually when the market capitulates and you see the crash and the fall. But you don't think that's necessarily going to happen this time, at least in crypto?
So you've got the correlation causation backwards, right? So the market crashing is what causes them to cut rates, right? Now, right? So if the market crashes and the Fed gets worried about a really deep recession with lots of unemployment, they're going to cut rates, right? Like if that actually happens, right? And you look at 2008, that's pretty much what happened, right? We had a really hot economy in 2006. Every liberal arts major could get a job on Wall Street being paid six figures, with a big bank, right? Trust me, I know, I was there. And it was a really hot economy, right? Basically they were hiking, trying to slow that down. Gasoline went from $1 to like $4 a gallon, like in a pretty short period of time. People were talking about, oh, this is the end of SUVs. No one's gonna be able to afford to use these things anymore. And then the market started to have cracks and things like that, and they cut interest rates, and did TARP to basically rescue the economy after Lehman Brothers. And that December, I remember I went to the petrol station in Utah, and I filled up my rental car for $19, right? Like it was a little mid-sized SUV. But yeah, it cost me less than $20 US to fill the tank, and like the price of the petrol was like under $1. Sorry, the price of the gas was under $1, right? And it had been $4, a few months earlier, right? So you see stuff like that. So yeah, that could be how it happens, or the Fed could actually be smart and not wait until it gets that bad, right? What they want to do is ideally they want to start hiking rates before things get too hot, like they were in 2006, and then they have to hike so much that they obliterate the economy, right? They want to, rather than end the party quickly, they want to, like just kind of slowly move us back into equilibrium, right? So that's what they're trying to do now, right? They're trying to basically hike those interest rates now to stop us from having, like the equivalent of a 50-cent hex blow off top, right? Because you guys now experience what a 50-cent hex blow off top feels like, right? It feels like it basically kills the economy for a while, right?
Damn it, Richard should have stepped in. He's our Fed. Damn it.
Yeah, I mean, and actually, yeah, like nobody thinks this way, but in my opinion, it would have been much healthier if a lot of the whales had just sold, at 20 cents or 15 cents, than for us to have that extra leg up. Because you get this sucking wound experience that's really hard to come back from, for a while. That's what happened in 1929, right? You had the Great Crash, and it precipitated the Great Depression, right? So you don't want to let it get there. Ideally, if you're a central banker, right, your job is to kind of stop it from getting too ridiculous. Now the Fed was sort of behind the curve a year ago, and meaning they should have started hiking earlier. But they've been making up for it. But it doesn't necessarily mean that we need to have this great big crash. What you could see is that actually just the economy slowly, comes down, and we enter a mild recession or something like that. But things still look pretty good. I mean, people are still, surprisingly to me, employment's still pretty good. Like, it's still pretty easy to get a job, partially because nobody wants one.
Right.
And it's actually hard to find good people. Trust me, really hard to find good people, especially good people to come on YouTube, and make videos for your product. So,
Thanks.
yeah, you're welcome. So it doesn't necessarily mean we have to have that crash, right? So I think that's something people get confused about. In a way, I think in crypto we already had the crash. It was last year. That what we experienced with everything between Terra Luna all the way to FTX and Silvergate is, like, in my opinion, the equivalent of the Lehman Brothers event in crypto. It was the same kind of contagion. So, like, to me, that's already plenty of blood and gore, right? So I actually tend to think we most likely don't see that again, those kind of numbers again. I don't think we're going to see Ethereum below $1,000, ever again, probably, unless Ethereum just gets leapfrogged by something else, right? Like, I think it's that was probably the bottom, to be honest. So hopefully you bought it. But yeah, we can still, we don't necessarily have to have a big crash. It can just be the economy slows down, and then they see the economy slowing down, and they go, okay, you know what? I think we've done enough. Let's cut. Right.
What of those scenarios do you think is most likely?
Yeah, well, I think we're already seeing it, basically, because the market is already pricing it in. So
It
the
feels
Fed,
like it's a more gradual
yeah,
adjustment.
it is
Yeah.
more gradual. Yeah, but I mean, it's already happening in a sense, because basically the Fed's already basically signaling to the market that they're going to cut next year, even though
Right.
they're hiking now. If you look at the yield curves, those are basically telling you what the market thinks the Fed's going to do next year, and that is already reflecting lower interest rates in the future. So, that's actually everybody's base case already. And that's why you've seen a lot of risk assets like tech stocks do quite well in the past couple months, and crypto as well. So, like, I think that's my base case. I think that's most of the market's base case, is that we're going to see lower interest rates next year. If we don't, actually, that would be bad news. Like, in the sense that, like, we've already sort of baked that in. So if we do have protracted higher interest rates, that would actually be a drag on performance next year. But yeah, most of the forward indicators for the economy are pretty weak, and they're kind of implying that the Fed's gonna, probably need to go back towards an easing policy. But also all these bank failures that we had, last quarter.
Right.
That's another thing that, like, the Fed knows they're going to have to, kill a few people, break a few eggs, in order to slow the economy down. But they don't want to make too much of a mess, right? So I think when those sort of things, what was it, Silvergate or Silicon Valley Bank, all these regional banks, Credit Suisse, all that stuff, when those things are happening, they're definitely paying attention to that, because they know that if they overdo it, then they can cause real problems, and that's why they effectively came in and more or less said that they're guaranteeing all deposits, or even ones over 250,000,
Right.
at the major banks,
Oh,
right?
wow.
Which isn't really what they're supposed to do. right? That wasn't like that's a pretty big statement that they made, kind of unofficially, but that was done deliberately because all the money was running out of all these other banks and into the too big to fail banks like J.P. Morgan. So they most likely probably think it's getting close to the point where they can start to signal to people that they'll cut in the future. But keep in mind, they don't have to cut right now. Like just sort of talking about the future is enough for the markets to be happy. So Jay Powell could say, "Hey, I'm going to hike 50 basis points this meeting." However, uh, this is I think this is my last. I'm just getting it out of the way now, and I really expect that we'll be heading the other direction next year. The market would rejoice if he made that statement, right?
Right.
So like their actual rate change doesn't actually matter. It's sort of the predictions of where they think their rates will be in a year from now, and we call that the dot plots. So if you Google Fed dots, you can actually see these things.
Where they put the dots in voting. I've seen that.
Yeah, there you go. Yeah, so the dot plots basically are votes from each member that basically show where they think the path of rates will be, over the next year or so. And you can see they disagree with each other a little bit, right? So there's some dispersion around the mean, but and there'll be guys that are more hawkish and more dovish. But that gives you a good idea, and that's actually what really matters. Like the people that are saying, will they hike today or won't they? Like none of that shit matters, right? What matters
the
is
decisions are baked in; they've been made before.
Yeah, exactly. By the time it's actually happening, it's like, well, you guys, if you've ever worked in any company, right? By the time there's a vote, there was already a whole bunch of meetings ahead of the vote where management gets together and basically says, here's what we're going to recommend, and we want everybody to say this, right? So it's not really a vote. You know what I mean?
Right.
If you've ever worked in a corporation, you know exactly what I mean.
Right.
It's they have a vote because they need to have a vote, but not because that's when the decision's actually being made.
Not because they cared about your opinion.
Yeah. It's just legally they had to do it, right?
Right.
Exactly. Yeah. And that's the way it usually is with like shareholder votes or anything. Like should we buy this? Should we do a mergers and acquisition? Should we buy this company? Like their management, strategy, McKinsey, their investment bankers, all these guys, are going to be, spending months, doing research or coming up with, plans and things like that. And by the time they actually, go to the board members, like it's already been decided, right? And that it's really just a formality when the actual event happens, and the Fed vote's sort of the same way. So yeah.
So where do you, with all that being said, where do you feel like the biggest opportunities are in crypto right now? In your opinion.
I kind of like being broadly diversified across the kind of major L1s, and then I quite like altcoins on those L1s, just because I think Bitcoin's already had a pretty good run. So I would think it's probably we're pretty well positioned for to have some sort of run up in those sort of more obscure L1 because they've really been beaten up the past month with the Gary Gensler thing and whatnot. I don't think that's actually a threat to them. And I think that over the long term, those things are going to have the best performance. So yeah, I own stuff, on Arbitrum, for example. I own stuff on Matic. I own Matic token. I own even things I don't really like that much, I forced myself to buy them like Solana. I forced myself to buy Cardano. I forced myself to buy, and the reason I do that actually is because I own so much Ethereum stuff, right? So the only thing that really fucks me is if Ethereum doesn't do well, right? So like I'm doing a lot of hedging essentially by buying things that could potentially disrupt Ethereum. Although I've yet to really find anything that I think is actually a serious threat. I still know that Ethereum sucks enough that if somebody did get their stuff together really well, Ethereum could be in trouble.
So Pulse Chain, you would say for you and your portfolio is more like a hedge against Ethereum not performing like maybe it could otherwise.
No. Pulse Chain is actually like a leveraged Ethereum bet, in my opinion. Like if you think Ethereum does well, then that's exactly what you want to hear, because Pulse Chain should do really well, and vice versa as well. If you think Ethereum's fucked, then Pulse Chain's double fucked. So yeah, like if you really like Ethereum, then yeah, Pulse Chain's I think a very good play, because yeah, we do well if Ethereum does well.
I've heard you say like 5 times you project we could do better than Ethereum, roughly. Something.
Definitely.
Yeah.
Yeah, absolutely. No, I mean, if we can't, then there's no reason to be invested.
Yep.
Right? Because we're certainly riskier than Ethereum, right?
Right.
Like Ethereum has all the kudos that we don't have. It's everywhere. It's well respected. Vitalik's, actually publicly seen regularly.
He's not hiding.
He's not hiding from anybody. There's no SEC investigation around it. I mean, Ethereum is, in the winner's circle at the moment, right? So,
I agree.
yeah, and we're none of those things yet. So, that's what you would hope for. So yeah, no, Pulse Chain must do a lot better than Ethereum. Otherwise, it's been a real waste of everyone's time.
Sure.
In my opinion.
Sure.
Because you don't want to take extra risk just for the to get the same result or a slightly better result. For me to be excited about Pulse Chain, I'd have to think there's at least 5 times, 10 times more upside in it than
10
Ethereum.
times more upside.
Yeah.
I like that.
And I believe that. Like Ethereum's worth what, 300 billion currently, something like that.
I believe so. Yeah.
What's Pulse Chain worth?
600 million.
Is it really?
Yeah.
We had a little pump this morning.
I'm sorry. 800 million. My bad.
Yeah, we had a little pump this morning, Dylan.
There you go. So just even if Ethereum goes nowhere, it doesn't seem crazy to me, that we couldn't have like a 25x, right? That would put us somewhere south of BSC, right? And that's with Ethereum going nowhere.
Well, if Ethereum did, that's what if it went nowhere. Yeah, if Ethereum hit 8,000 in the bull run, that would be what, 2, 4, 6, 8, like a 4x. So you would take 4 times 10, that'd be a 40x. That you would think maybe Pulse Chain is capable of doing.
Yeah. So if Ethereum can do a 4x, and we can just kind of become, the third biggest, L1 after BSC, the third biggest EVM one, right? So we come in somewhere, just between them and Matic, like that's real. That's a realistic upside scenario, in my opinion, and like that would translate to maybe 100x, right? In the next bull cycle, and a lot of people think that's FUD, but I'm very happy with 100x.
If I get 100x,
yeah, that's absurd. We need to keep having Buck come on streams, because I'm pretty sure it went from like a 10x to a 30 to a 50, and now we got a 100. So
Because we keep getting yelled at, guys. We keep getting yelled at.
No, but that's not my central forecast, guys. That's just my like very optimistic scenario, right?
sure.
This is somebody's twisting his arm behind his back. Like
No. You didn't ask me what the probability of this happening is. But yeah, I'm just telling you what a bright scenario would look like.
It's funny.
Yeah.
I'm down here in Puerto Rico, Buck, and there's some Mexicans down here I hang out with, and I came down in February, and they have the kind of the same tune that maybe we could do a 10 to 20x, and now the tune's kind of adjusted where they're to 100x now, and I'm like, okay, this is good. Like anytime I hang out with them, they get a little bit more bullish because they see the capitulation of the whales. They're actually watching the whales capitulate. They're like, okay, and they know exactly where their bags are at, and then they could see basically them stepping up the ladder, if you will.
Sure. Well, the lower we go, the more easy it is to do X's off the bottom. That's for sure. But I don't think my views changed on this. Like I felt like 100x has always been the number that I've quoted as my incredibly optimistic scenario. Probabilistically, the odds of that are, I'm going to say less than 10%. I won't say how much less than 10%, but probably a lot less than 10%. In fact, probably less than 1%, if I'm being honest. But yeah, you do have some non-zero odds of 100x. I think in the next cycle with Pulse, if you're buying today. I do think
1% is almost nothing.
Yeah, well, but that's just my opinion. But 20x and the odds of a 20x and a 30x and a 10x are much higher, much higher. And then you have to look at the downsides, like what are the odds of a minus 50x, or sorry, minus 50%, or a 0.5x. Over the next 3 years, and you have to counterbalance it against that, right? When you make your choices. So I like to think about it probabilistically, like my central scenario, might look like a 15x if Ethereum does a 3x over the next 3 years, let's say. That would be like kind of my central scenario.
Yeah, interesting. Do you think it's more or less likely that we see a more elongated, like a shorter or a more elongated bull run this next go around than we've seen in the past? Do you have any thoughts on that?
Yeah. Well, I mean, usually the thing that ends the cycle is when the banks stop lending.
That's interesting. Because they didn't necessarily stop, and I'm speaking just for crypto, they didn't necessarily stop or tighten lending during the last few pullbacks in the crypto cycles, have they?
Yeah, that's right. But what you'll see is people will stop taking out mortgages and things like that because interest rates are higher now and they can't borrow as much. Right, so the Fed's really caused that to sort of dampen things, and that means business activity decreases and things like that. So, yeah, I don't know if it'll be more elongated necessarily. This was a very long, stupid cycle we've had. I would actually I would hope that we actually go back towards more normal cycles that are less artificial. So I'm gonna say no. Now in crypto, I think our cycles are gonna get longer, just because we're not gonna have as many step changes, and we're gonna start to behave like the rest of the global economy. So that's a much easier question to answer. I'm a lot more confident about that.
Right.
So yeah, this whole halvening narrative, if it's every 3 years or whatever, those cycles are going to increase in length. Just because 3 years is not really a long time.
Right.
Right. It's a long time when you're a startup or when you're brand new, but when you're already pretty mature, think about a company like Apple. What were they doing 3 years ago? Doing exactly the same thing they're doing today. You know what I mean? Like, what did the iPhone look like 3 years ago? It looked pretty much, it looked pretty much the same, right? But there was a period, when they were having tremendous growth, 15 years ago, 20 years ago now, maybe even, I can't remember now. Where the difference in 3 years was the difference between, the iPod 1 and the iPhone, right?
Yeah.
Or it felt like that. Like,
I think it
felt
was
like
16 years ago they actually first came out with the iPhone. Like 16 years, almost like to the week. So
okay, there you go. So that there, sometimes you get these sort of periods of explosive growth, but I don't think that's likely to happen here. It's going to take them 3 years to figure out sharding, maybe, right? In Ethereum, right? So I don't know. We'll see. But we can also be wrong about all this stuff too, because you can get big step changes coming in, and AI could potentially be the thing that starts providing that. So we could see actually explosive growth pretty easily. But it's really hard to predict that stuff. Like that predicting the rate of technological change is really, really hard. Because sometimes you have years where they invent flight, and just or things just completely change, right? And that could very well happen here, right? But you just can't really bank
It's
on it.
not predictable, right?
Yep.
Yeah, very, very, very hard to predict, and that's why Warren Buffett doesn't buy tech stocks, because it's very hard to profit off of them. They every time there's new technology, everybody and their brother comes up with the same product, and most of them fail. And oftentimes,
sounds like crypto.
Oftentimes they're early as well, and the thing's not viable yet. Like the Palm Pilot was basically an iPhone in the mid '90s. It just wasn't as good as an iPhone, and therefore nobody used it, right? But it's the same idea, but the technology just wasn't there yet. So you just don't know when this stuff is going to get good enough where you wake up one day and the whole game has changed.
Right.
And I'm waiting for something like that in crypto too, because I look at Ethereum and I still think, man, this sucks. Every time I use MetaMask, I think this sucks.
Absolutely terrible.
How is this going to be the world computer? It's like this thing is fucking confusing. Every time someone has puts a message in one of my chats about a stuck transaction, I'm just like, this. How can this thing change the fucking world, like the way it is? Like it has to get better. It has to get more intuitive. It has to get easier. Just the way the iPhone is, right? Simple, easy, elegant, streamlined. Always works more or less, right? That's what it needs. That's what it needs to be like, and we're not there yet. And like most of our coders suck, right? Most of the stuff is coded by teenagers. Like wait till like companies really start to embrace it, the ones with like the really best people, and they really start putting proper money into it. Like we'll wake up one day and we'll realize, holy shit, like how much has crypto changed? And
that's why I stayed for 15 years.
Well, yeah. Yeah, if you staked your Palm Pilot for 15 years in 1995,
I mean, sure.
Oh no.
We had this discussion earlier today, so sorry about that. It was still fresh in my head.
Yeah. What do you guys have any thoughts on what the next narrative or the narrative for the next bull run might be?
QE.
QE, right?
Yeah, seriously. Yeah.
Yeah, I think quantitative easing would be nice, but I think just
And your audio is really quiet, but
We can't hear you.
I think the thing I'm looking for really is just institutional investment, but I've been looking for that since 2017, and when we got
We
the
still
senior.
can't hear you.
All right, hold on. You guys talk amongst yourself.
Yeah, so he said he's been looking for the institutional investment since 2017. So he's kind of looking forward for that still.
Oh, would that be the next narrative of institutional money coming in and really picking up crypto? Okay.
Yeah, especially with all these strings of ETFs applications
Yeah.
coming through.
Yeah.
So,
Yeah.
I mean, that's pretty bullish, right?
right, really bullish.
Mhm.
What are your thoughts, Dylan? Do you feel the same? Do you feel pretty similar to Buck and price performance for some of this stuff and whatnot?
Yeah. What do you honestly think? Do you think it's the same?
Well, I think that yes, I do agree with a lot of things that Buck says. He is he's been a faucet of very knowledgeable information that I've
Agreed.
soaked up, right? And I do agree that Pulse Chain is going to have it's going to have its day one day, right? But I do think that it does depend on Ethereum. However, with that being said, I think on a more granular level, that PHEX, since it is the thing that is the store value of the chain, I think PHEX will outshine Pulse Chain return wise. Kind of because if Pulse Chain gets too expensive, it's basically pointless. So we need to stay cheap on Pulse Chain. We need to stay fast, right? And Hex is going to be your store of value. So I think being well positioned in PHEX is probably the play. Honestly speaking, right? So if we get this dip that I'm hoping for, kind of mid-July and August, sort of. I will much rather be wanting to buy PHEX personally than I will Pulse, just because I think that it's the store value. Without it, what else? Where else are you gonna put your money? If Pulse Chain is supposed to be the network, like the Visa, the Mastercard, and Hex is your gold, I mean, why else does it exist at that point? You know what I mean? So
if Pulse Chain does a 15x, what would PHEX do?
I don't know, man. Just think about the cheat codes at the disposal of the OA, right? So that can artificially be moved.
Man,
So
you're telling me, bro. That is true. I'm glad I have bags of all of them.
yeah, it's basically all one bet, right? They're probably all going to move kind of in the same sort
I know
of.
I've heard Buck talk about that.
Yeah, and that's why we have the RH Maxi pool, right?
Right. Well,
just think,
I mean, Wes Scott's not going to get his 10,000x and Paul Sexton.
I mean, I hope he gets what he's looking for, but
so do I. Oh my gosh, yes, so do I.
It's better for all of us if that shit does a 10,000x, right? But
Dude,
I would like that to happen. I would like that to happen, but do I think it's going to happen? No.
When you guys buy lottery tickets, do you expect to win or do you hope to win?
Yeah,
because I'm just because I'm just confused by these guys that think they're getting 10,000x. It's the equivalent of basically buying a scratch ticket and saying, "Well, I expect to win." There's a chance you win, but the odds of you winning are low.
And I think crypto is really tricky in that respect because the people that have won big oftentimes are more equivalent to lotto winners than seasoned wise investors, and so you have lotto winners giving lotto advice on things that arguably shouldn't be treated like a casino if you're in good stuff.
Yeah, I can tell you, the vocal Hex OGs are some of the dumbest investors I've ever encountered. like they literally were lottery ticket winners, and you know, it gave them massive overconfidence. And I've noticed this with anybody who ever makes money, it immediately gives them overconfidence. You know, I've had siblings that, you know, went from being, you know, broke to wealthy in the span of a year or two. And suddenly, you know, I'm like, where did all this confidence come from? You know, this guy used to be a geek, you know, like and yeah, I think a lot of people experience that too. In reality, they just got lucky on that one occasion. And then they go and they tell everybody that, you know, it's that they're the right guy, that it's going to repeat again because they were right on this one occasion. That's called survivorship bias, by the way. So the odds are is if you got wealthy off of Hex, it's not because you're smart, it's because you were lucky. And you're probably no smarter than the guy that was shilling BitConnect or buying BitConnect in 2017. You just got a little bit luckier than they did. You're probably just as dumb as that guy, though.
Right. So
They do.
And Corey and I have talked about this a lot, and so like, and we've done it with real estate. In fact, it's really interesting trying to figure out real estate. A lot of people say that they know how to do it well, and after you talk to enough people that feel like they know how to do it well, you are able to develop your own investment thesis and actually learn how to do it well through trial and error. But it takes some time and it takes experience in order to get there and develop a sound investment thesis, at least in real estate. And so where can people go to cut through the narratives, to get the best information? You know, what would you guys say to that?
You know, it's funny. Since 2017, it took me years to be able to cut through shit and figure out this guy's full of shit. This guy's an idiot. This guy doesn't know what he's talking about. He's just copying this other guy. So it's, you know, for me at least, it was paying attention to what people were saying and then kind of keeping track of what actually happened. And then, you know, kind of filtering through as much info as possible and kind of gathering and just kind of it's just trial and error from my part, really, from listening to people. But
do you have people that you feel comfortable sharing that other people could look to follow or to gain insights from?
Well, I mean, now I just, you know, I talk to a very small select guys that aren't public, right? So, like,
I know those guys.
Yeah. So, like, you know, I don't really, you know, I don't really watch any more YouTube. You know, I think that's probably a fool's game in terms of like looking for, you know, if you're following some TA guy on YouTube, you know, like, come on, there's better resources out there. You know, I used to read a lot of what the Fed was doing, and I try to learn as much as I could with that. I used to read the subreddit for Bitcoin all the time, for our cryptocurrency. You know, I used to do all that, but now I basically just reside on Telegram for the most part and talk to a select few group of guys. That's it.
I like it. How about you, Buck? Anything you want to add to that? Might be MIA.
No, he's MIA.
Yep.
Oh, sorry, I'm here. I don't really listen to anything crypto related. I just look at I just look at the broader markets in general and you know look at what central bankers are doing. But that's something I'm very comfortable doing because it's what I've been trained to do.
The top-down approach.
You know, and it's not the only way to approach things. Yeah, that's right. You know, for bottom up, you know, I really just rely on people that are more into that, and to kind of, you know, come and, you know, pitch me things. And I've got a pretty good little network of people that kind of help me do that, kind of unrelated to anything pulse chain. Yeah, so I kind of let other people tell me what the new mega trends are, but you know, I also try not to buy things that are trendy. You know, I bought Stargate, for example, maybe six months ago or 8 months ago, right? Stargate, if you guys recall, was this thing that like was really big towards the end of the cycle, right? And then it crashed, right? So like I bought that one, for example, like 8 months ago, because I thought, well, this is actually pretty interesting what they're doing, but you know, I'm going to wait until the valuation gets right, you know. So I try to just be really patient, you know, and when things are, you know, when I get these things cheaply, that's when I want to buy them. I'm not a big fan of trying to, you know, guess what the next big thing is, because I think you're usually just exit liquidity when you do that. The way I made all my money with Hex was buying it, you know, at 1 Satoshi, right? Probably every other time I bought Hex is basically lost me money. You know what I mean? You know, I suspect the way I'm going to make a lot of money on PulseX, a lot more money than Westcott Crypto, is by buying it, you know, at a low price. You know, and so you know that's what I like to do. But you know, there's more than one way to make money. Like another good way to make money is to just you know, originate scams, right? So that's what a lot of people do. They just originate scam coins, and
True, yeah.
And then they can look like investment geniuses because they're always up 10x and you're just their exit liquidity. So that's a business model that works.
Yeah. This is our good old friend who loves to dump. Yep. Yeah.
Cool. Well, this has been great, you guys. Seriously, appreciate you coming on, talking about your products, talking about the market, and trying to help all of us learn from your experience and wisdom. So we appreciate it. Is there anything else you guys want to shill or talk about? Let people know where they can find you, anything like that?
Yeah, join our Telegram. Stay tuned for the next rounds of airdrops that we'll have. T.me/PHUX crypto, right? There's currently a airdrop round right now. If you have sacrificed for I believe Liquid Loans, Power City, or PulsePot, you're eligible to claim some free PHUX. If you sacrifice for fame, you're also eligible. The early stage sacrifice for fame, right? You're eligible to claim some free PHUX tokens as well. And I believe if you sacrificed for Pulse and PulseX and didn't move any coins out of those wallets, I think you're also eligible to claim some PHUX as well. So that's free airdrop. If you're not in this round, don't worry. Maybe you'll be in some of the next rounds that we have in the following weeks. I think roughly they happen maybe every 7 to 10 days or something like that. Buck, what do you think?
You're muted, Buck, if you're talking right
now. Yeah, it's really just dependent on when we want to do it, but it
can vary.
It's every 7 days would be the minimum amount of time, but it could be more space in between. Just depends on our schedules.
Sure.
There you go. So make sure you join the Telegram, ask questions, be prepared to get muted because we like to hand those out. But yeah, follow us on Twitter. You can find us on my Twitter is @BB_trippin. Buck's Twitter is, you can follow the PHUX crypto one or at Fiat Crypto on Twitter, right? Or at Famous Crypto and stuff. So follow us there. Keep in tuned. Make sure you got the notifications on for actually a great resource that I haven't mentioned is the PH News announcement channel. Right. So if you don't want to be in the Telegram and you don't want to have to deal with 500 messages a day, and you just want to filter out the nonsense and just be have some notifications on so you don't miss anything, join the news channel. I believe it is at Fiat News, if I'm not mistaken. But I'll link it in the Telegram, or I'll link it for these guys so that they can post it in the channel and stuff.
Yeah.
I think it's t.me/fiat news. Yeah.
Yeah, and that's probably the best place that you can go to get, yes, it is at Fiat News. I'll post it here in the chat for you guys. There you go. And yeah, that's probably the best place you can go if you just want straight filtered notifications. That's the place you want to be, right? So you won't miss the airdrops there, I bet.
Cool. I'll put it in there. But yeah, seriously, we appreciate it. This is Corey and I. This has been one of our largest airdrops that we've gotten with the Phux protocol. So we're very appreciative. We
Nice.
we like what you guys are
Keep it
about and what
coming.
you're doing. And yeah,
Keep it coming, baby.
We're appreciative.
Buck is the give it tree of crypto right now. We
you go.
appreciate it.
Yep, absolutely. Cool.
Yeah,
Well, thanks again
Yeah.
for being on.
Well, thank me by providing LP, guys. That's what
Yes, there you
that's
go.
what I need from you.
Oh, I am.
Once again, I'm asking you for more
LP
on my platform,
Excellent.
please.
Right.
Yeah, I
All right,
don't
guys.
care where you provide it or how you provide it, but go for it. Yep, thanks you.
It's all in there. You got it.
Yes. All right, cool guys. Well, thanks again for jumping on, and thanks everybody for tuning in the show.
Smash the
Smash
likes.
the likes,
Hit
subscribe.
subscribe on your way out.
Yep, we're here to pump everybody's bag. So with that, have a great weekend, and we'll see you guys later.